Good afternoon, I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. The media was busy last week ahead of this Tuesday's House of Commons vote on Theresa May's Brexit plan. Whilst negotiations in Brussels between the UK and EU have been drawn out, it is appearing increasingly likely that the deal presented this coming Tuesday will be rejected. And with all parties concerned appearing willing to add an extension to the end of the March Brexit deadline, this seems the most likely outcome, adding further short-term relief for both markets and sterling. This is backed by comments from the Bank of England Governor Mark Carney earlier in the week, when he suggested that a no-deal Brexit was half as likely as was stated by the bank last November. Heading over to China, there was the annual People's Congress in Beijing, where key long-term plans were discussed and implemented. The opening statement of the conference saw Chinese Premier Li Keqiang lower the growth target for the year to 6.5%, whilst Li stated a more complicated environment going forward. It must be remembered that the Chinese middle class continues to grow, and for a country with a population of over 1.3 billion, a growth rate of over 6% is very positive. The European Central Bank also met last week to set monetary policy, and as expected, everything remained broadly in place, with the exception of the introduction of targeted long-term refinancing operations programme, which are bank loans intended to offer cheap money in order to boost the economy in 2019. The head of the ECB, Mario Draghi, stated that growth concerns driven by trade uncertainties with the US was the reason for this programme. However, he was clear that this, coupled with the accommodative nature of the central bank, will increase the market's resilience throughout 2019. In terms of data points last week, the most prevalent was the US jobs report, which saw unemployment significantly decrease to 3.8%, with wage gains strong, so positive data continues to be forthcoming from the area. Now that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting markets in the email.